GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another edition of the weekly webinar. This uptrend in the dollar yen and downtrend in the Japanese yen across several currency pairs has been one of the best trends in the forex market in recent memory, and really providing a lot of opportunities here. Maybe we're close to a top where we're over 126 now, as I say, 25-year highs. I mean, that's certainly extreme levels. But for now, we're following the trend, and this has been a successful strategy for the last few weeks. This is the way with trading, is that sometimes there are no trending markets, and every time you trade for a breakout, it doesn't materialize, but then one market really takes off, and every breakout almost works, and you get a lot of opportunities if you just stick with it. So this is the nature of trading. It takes a lot of patience sometimes, but sometimes you can really get rewarded with these strong trending markets like we're seeing in the yen now. All that said, I've probably caused a top by making all those kinds of comments, but it's been a good run. I think that's the point. And if you've missed out on these yen trades because you've been focusing on other currency pairs, that's absolutely fine. There's opportunities across all these markets, but I'm just pointing out where really unusual and great nature of this yen trade. Also seeing some breakouts in gold and silver, which is good stuff for precious metals bulls. I'm going to point out those aspects in a minute. Testing the lows in Bitcoin and stocks, obviously a bit more of a kind of risk-off tone to markets. I'll discuss all that and more. If you have any particular questions, drop a comment in the video, please. Otherwise, just click that like button. We really appreciate that. Right, let's start with the Forex market as we normally do. Move through to commodities, then indices, then crypto. So starting with the euro dollar. So this was our premise from last week, that we're in an overall downtrend, and that probably we want to be biased towards the downside because of this strong trend that's been in place for months. And most recently we had what could have been a double bottom we were talking about last week, and it still could. But it's looking increasingly like it's breaking down, and what we said was probably the more likely scenarios that we had this consolidation, which was something a bit like a bear flag. So we had the market trend down, it retraced in this flag formation, and now it's extending the next pole down. So you can see the market it broke down. We had a bit of a false breakout for one day. But now, as we start the new week, we're pushing down into this previous support again. And it looks like this support's breaking. And if we use this prior pole as a bit of a kind of rough idea as to where this market could go, then we can look at something like this, which would be substantially lower prices. We'd be talking but like 103 kind of territory. If the next pole was the same pace as the first one. There are different ways of doing that. I mean, you could also take a vertical from the breakout area, and I think that would take you to a roughly similar area. Actually, sub 103 if you use the vertical height of the initial flag, and what the following flag could be. So this is something to bear in mind in terms of the possibility. And I know this downtrend's been going for a while, so just bear this in mind. This could be a potential downside target. But the other way of thinking about this is if we don't get to this target, and then we start moving back over the moving averages and things like that, it may be when the market doesn't reach the objective it's kind of supposed to reach, if you like. It's a sign that we're getting that change in momentum, that change in trend. But we're not there yet. It looks like we're breaking down. Now, if we drop down to the 4-hour chart, we can see things in a bit more detail. And you can see that the market's it crashed down through that rising channel. We talked about that last week. And then through last week, it tried to push up several times, but just failed at the resistance. You can see failed. And then we formed a new high through here. Broke down to those multi-year lows, tried to rally up, came back to this same, broke through this high here, but ended up back at this kind of similar sort of basically zone of supply created from back here. Just ran into it again, and the market rolled over. We saw that short spike up, but haven't seen much buying interest since, and now we're sliding under, and it looks like a breakdown. So any pop-ups in the price towards the moving average look like they should be decent opportunities, and I'm not even sure they're going to occur. It looks like we're rolling over. Equally, look at the RSI. You can see it does seem like we were in a rising trend. There are different ways of drawing that trend line, but it does seem like it's breaking down. The price is breaking down, and so is momentum. Okay, let's switch gears to the British pound. So here's our daily chart here, and even more obvious kind of attempt to kind of push off the lows here. So this is our daily chart, and this is our year-to-date lows that were hit in March. We obviously had the first rally up, failed at that, came back to the support, that acted as resistance. We rolled over, made new lows, then we saw that massive run up there. But again, we failed into this supply zone here, and you can see that in a bit more detail on the 4-hourly chart. Here again, there's our big year-to-date low, and that was our kind of interim low. We acted as resistance several times. We tried to break down just from there, but obviously it'd been a long time coming, getting down to new year-to-date lows. We saw that massive short covering rally, but it banged straight into the moving average for one just worked perfectly there, but it was also this same supply area created by that, pretty much by that same low that we showed on the daily chart, was these highs through here, and then on an interim basis it was through here, through these peaks, and the market is tanked. So what do we read from this? Well, to me, this was an encouraging sign. A false break followed by a big rally up. After something like that, you'd want to see this kind of move down, a kind of pullback back into those highs. And I think once we saw something like this, a few people would have been long in this area, and you can see the market consolidated for a while, but it started to look like the buying interest was fading. And so that was the kind of area of support and resistance. Big surge up. Okay, so you don't want to buy at the high of the surge, right? But you want to wait for the kind of pullback, about 50% into an area of support and resistance. This was the area, also the moving average, where the market needed to bounce and come up and make new highs. But it obviously hasn't bounced. It's rolling over again, back to the the year-to-date low. And this year-to-date low, okay, it's held very well so far, and it could hold again. We're obviously testing it now. It's the 130 level as well, the big round number. But to me, it looks like it's not going to. It looks like it's going to give way in favor of the overall downtrend. Let's see. Let's hope we get some kind of bounce, and that may provide us some opportunity to go with the overall downtrend. But it looks like this support didn't hold. We've got another support to get through at 130, but it looks like we're breaking down here. So what are we looking at here? Just dollar strength, basically, right? And dollar strength, very obvious in this chart. This is our monthly chart of dollar yen, and we're up at 120, over 126.50. And that was this big area of resistance that we have to go back over here to 2002 to find the last time we were at these kind of levels. So interesting stuff. If we drop down to our 4-hourly trending time frame, trading time frame, you can see that here we are. This trend has been working very nicely, making new highs, breaking it, pulling back to the high, making new high, pulling back to the high, making new high, pulling back to, in this case, the old high here, and the low, breaking out, pulling back to the high, and it looks like we're set to go again. But maybe we come back to the low, maybe we come back down to the 126 number, but overall the trend is intact. So still looking for pullbacks in dollar yen. Here's gold, and I mentioned that we're breaking out to the top side in gold. So the highest we've been since the 11th of March, so about About 6-week highs here in gold, which is good. 1990, just shy of the 2000 level is there. So you can see what we rallied up to just shy of all-time highs, and then basically in the space of 2 days tanked back under the key 2000 level, right? So this is what we kind of want to recapture psychologically, is this 2000 level, which is now just $10 away. Dropping down to the 4-hour chart, just to look at things in more detail. Here you can see the trading range that we've been in. Oh, I actually wanted to mention one more thing on the daily chart. Look at this, is really nice. Go to overbought levels at the record high, drop back to the 50 level in RSI, and look how we just hugged that 50 level. Hugged, and now we're pushing away from it. And you can see this is where the market based out for a while, right? It just went sideways, hugged the 50 RSI. Now we've got the breakout in the price, and the RSI is moving away up into the overbought territory again, but not there yet. So this is all to me indicative of a new uptrend in place after the market based and held onto the moving average, held onto the 50 level. Now down to the 4-hour chart, as I mentioned, and we can see we're breaking highs as we start the new week. 1981 was the resistance that we've been stalling at, but we broke above it on an intraday basis, and now pushing up to 1991, $10 above. But overall, this is a bit of a kind of a cup and saucer formation, where you have that big drop, and then you kind of have the teacup at the bottom, and you start rallying out the other side. So gold looking encouraging at the moment. As you might expect, silver doing similar things. Here's the daily chart for silver. So equally made that, it wasn't close to all-time highs, but we did make big highs in silver. We dropped back, challenged the 50-day moving average several times. I mentioned the same thing last week. In the case of silver, we actually did drop below the 50 level. You can see we tested it, dropped under, but now we're comfortably back above it again. And we're testing the highs. We haven't got a solid breakout in silver yet on a kind of on the high basis. So you can see the high is through here. But if you look at daily closes, actually you can kind of see that the daily closes were kind of this high, daily closes through here, and you can see we did get a close above there. We pulled back to it on a closing basis. See, we tried to drop intraday, rallied back up. So this candle was very bullish because we closed above a resistance, tried to tank back through it in a false breakout, but actually we closed back above it. It was a down day, but actually it was quite a bullish day. And now we're pushing to the top side again and looking for a close even above this high and confirming the overall breakout. And you can see what we're sort of looking at here is basically that this correction lower, surge up, correction, and now break out of the correction, and looks like we're on course to challenge the highs. These things never happen in a straight line, and we could obviously have a pullback down towards the moving average, down towards this broken trend line again, but the direction of travel looks like it's heading towards the highs. Now having a look at the oil markets, so let's, I'm also confusing myself here. I've got a similar trend line that I just drawn in silver. You can see how the commodity market's somewhat linked up at the moment. So had a high in gold, a high in oil, a second high, and I thought maybe oil was going to break down from here, but it's actually held on to this support pretty well. And what I thought was interesting about this, only 2 touches on this trend line, so it's not super valid. Other than, I thought this was kind of interesting. On the 4-hour chart, you connect those 2 peaks, and you can see we hit the 200 moving average, and we tick down to this broken trend line, and from there we find support and rally up through the moving average and through this quite solid resistance that's been tested 3 times quite consistently around the 104 level. 104 has been resistant since the end of March, so actually all through April 104 has been resistance, and we've broken above through it. So what you'd naturally expect is for 104, having been a solid resistance, to now be support to support the new uptrend that's taking place. If we drop back down through 104, then the next level of support is again this broken trend line, and that could still hold. And 100 is that big psychological level. But you would think after having broken that resistance that actually we wouldn't need to go back down to 100 again. So oil, like silver, been consolidating for a while, and so this is that kind of bigger trend line where you can do a kind of similar one. You can sort of see this has been sort of the shape of this pullback, held the support, rallied up through the retracement area, and above this moving average pulled back, touched this moving average, pulled back, above this moving average, pulling back to the moving average, and all this information would suggest that we push up to the top side for some. We make some further progress to the top side is what all this evidence would suggest. Right, look at the stock market now. This is the daily chart. So you can see sort of what happened here is that we had a really nice rally off the lows, made a new high through. This was the double top from when was that? Early February. And then we tanked again. Didn't make much progress through the January low. Made slightly lower lows in the start of February, and then we put that bottom in and we rallied right up. But we kind of stalled. Basically made a false break over those two peaks, and we've been retracing. But the fact that we did make this strong rally was encouraging, and this has just been a pullback, and we've been trying to time, when the rally might resume. It hasn't rallied from there, it hasn't rallied from there, and it looks like it's not going to rally from here either. It seems to be rolling over from the current lows. So it looks like this, which is probably about a 50% pullback. Yeah. So you can see that we tried to rally off the 50% pullback, but it seems like it's not happening. So the next opportunity could be the 61.8. If we don't hold there, then it's starting to look a bit troublesome, and we may be headed for another test of the lows. So watch out the current levels. Maybe this is a false break. We don't have a daily close at the moment. So if we get a drop and then a daily close back over the 50, that would be encouraging. And this correction could be over. But if we drop down and close under the 61.8, which is about 4.330, let's say that, under there, that's problematic. Drop down to the 4-hour chart, and you can kind of see that, yes, it's not been a really aggressive sell-off, but it's been consistent. Make new low, pull back to the previous low, make a new low, pull back to the previous low, make a new low, pull back to the previous low just about. This time we managed to rally up to the high again in a bit of a consolidation, then dropped and made new lows. So do we make new lows and then these old lows resistance, and then we drop down again? That would be a problem, I think. And last but not least, Bitcoin. Let me just start with the daily chart. How I'd mentioned that basically we had a false breakout here, and that I thought this was bad news, the fact that we couldn't hold that breakout area. And then I put, like a backup for bulls would be this previous peak through here. And if we could rally off there at least, that might be encouraging, and the moving average, but we haven't. We tanked through there, and it looks like we're now taking out this near-term low as well. So as I kind of suspected, this was a false breakout after this consolidation, and it looks like we're moving back down to test the bottom of this trading range. And that could hold for a third time, and maybe enough buyers come in to put the low in at approximately 34,000, and we do rally up from here in after like a triple bottom pattern. That's possible, but I suspect we break to the downside. And just looking at that trend in a bit more detail, here you can see us taking out the low. So if we rallied strongly up through this low again, that would be encouraging. But you can see we really found support several times. There's a bit of a kind of rising trend line through there as well, if you'd prefer to draw it like that. We'll drop that down. So maybe a rally up to this previous support or up to the rising trend line. That would provide selling opportunities. And if we get a strong rally through both of those and close above, then maybe we're at a false breakdown and maybe the low's in. For the time being, it looks a bit rough in Bitcoin, and it looks like it's heading down towards the bottom of the range, which I showed you in the daily chart, but here it is on the 4-hour chart. All right, that's it for this week. Thank you very much for tuning in, everyone. Good luck trading this week. See you at the same time next week.